In this lesson, we'll look at the recording of a tax paid. Now, this tax is not determined by profit. We haven't yet looked at profit. The reason is the tax is determined by an assessor in some countries. In the UK, of course, it depends on the profit. If you didn't make profit, you don't pay tax. If your profit does not exceed 11,000 as of 2016, then you don't pay any tax. But in this case, it's determined by an assessor who is from the tax department. And the amount assessed for this small business is 1,500. Now, is it important that we record the tax paid? Yes, it is, because it affects the assets in the business. Cash is one of the assets, so we need to know how much cash is left in the business after the tax is paid. Remember, we're not mixing personal money with business money. Well, ideally, yes. So we need to record this, confirm that tax was paid, and how much is left after that is what becomes income to the owner after the end of activity for that financial year. But remember, this income to the owner, part of it was taken from the business at an earlier stage, simply because they needed to survive. Remember, this computation, this figure, much as it's assessed anytime, but we assume, well, it's determined at their end. Anyway, we need to see its impact on the records of the business. That's why we need to record the tax paid. So let's get to our recording device. This is our recording device here. Let's expand this slightly. I hope that is okay. So this is our recording device, and the form we need for this is in Module 2, Miscellaneous. Now the form we're going to use for this is number 6, that 2-entry form. Now this is a multi-purpose form. Actually, when you click on this guide here, it says it all. It's a multi-purpose form. Okay? It's a multi-purpose form that can be used for any kind of transaction that does not have VAT. Now, the amount recorded on the top row is debited to the account selected there. And the amount generated, actually, it's not recorded. Oh, yeah, it's not recorded, but generated. It's automated. Is going to be credited, or it comes from the account that appears below here. Now, in the case of this tax, it was paid by cash, and the amount is going to the tax paid account. Okay, let's start with the source of the money, and that money is coming from cash. So we click the drop down and we type a C in there, CAS. That is our cash account. We double click that. It hasn't registered. I wonder why. Let's do it again. CAS. Click once and it's there. Yes, we're supposed to click once, and then up here the money is going to the tax paid account. So we type a TAX. Now we can scroll down here and identify the accounts with the word tax in them. There's account 281, which is final tax. I'm wondering if there's any other tax to be paid. Well, I think, the tax should be paid 1 year. That is either the assessed tax or the tax that depends on profit. We're not talking about VAT. So this is owner's cash after tax. This is owner's cash before tax, and this is tax outstanding. And then tax paid on account. There's a number of accounts. I think let's go with 2281, which is the final tax paid. Okay, there we are. And the amount is 1,500. So 1500. And the narration is going to be tax paid. Tax paid. Tax paid. Now, this is document number 8. Now, this multi-entry form does not generate document numbers. So we've got to type in the document number. So we type an 8 there. If you don't type the document number, it will simply not be saved. It will simply not be saved. Looks like we're ready to save, but before we save, the 1,500 is coming from the cash account and it's going to the final tax paid. So we click save and close. The saving has been done. All right, now let's check on what we have recorded. Check on what we have recorded. Transaction edit. Click that. We're looking for a transaction recorded from document number 8, and it's the one at the top. Now the date, it says 31st. I think we need to correct that one. We used, okay, yeah, let's click edit. Now before we click edit, is the rest fine? That is 1,500. It matches with that. Now this money comes from the cash account, so it's a negative, so the cash balance will reduce by that amount, and it ends up on the final tax paid account. Now what we need to modify now is the date. So we click edit and we click the drop down here. We need the 31st. Select that and then click set. There it is, and we can now update. We can say okay, and I think we are happy with that. Now before we pause the video, which form are we going to use? We are going to use form number 6. That's the 2-entry form. Okay, now it's time to pause the video and record. I pause mine. Well, for those who have recorded, thank you very much. Thank you very much. And we should verify if what you have recorded is correct. You come to transaction edit, and there we are. It should be 31st of March. And the narration is tax paid. The amount is coming from the cash account, going to the final tax paid account. And we should be happy with that. Let's have a very brief look at the dashboard, which is a quick overview. Let's see what is happening down here. Down here, because this affects the balance sheet. Balance sheet. The amount paid 1,500 is here, and that tax ideally is on profit. It should be on profit, and we'll realize that the cash balance is reduced accordingly. It was 4,500 something. It has been reduced to that amount. Well, that brings us to the end of the recording of tax paid. Any questions via our Facebook page? Thank you.